Afternoon, good evening, good morning, everyone, wherever in the world you are watching from. My name is Pat, the analyst, and today I'm going to be talking about some cryptocurrencies, and I'll be sharing with you my technical perspective and my technical view as a technical analyst, like the name, Pat, the analyst. So, what are we going to be looking at today? We're going to be looking at BTC USDT, we're going to be looking at Matic, we're going to be looking at BNB, and we're going to be looking at what? Alice USDT. So first we'll start with BTC, and you know why? Because BTC is the mother of all cryptocurrencies. Okay, so what are we going to be doing on BTC right now? We're going to be doing a top-down analysis on BTC USDT from the top to the bottom, okay, which is from the higher time frame to the lower time frame, and then we're going to come up with the expectational bias of each of this time frame. So what are we going to start with? We're going to be starting with the highest time frame on my chart here, and that is the monthly time frame. So looking at the monthly time frame on BTC, what has been happening? What has been happening on the monthly time frame? Overall, what has been happening on BTC, as we all know, is that BTC has been trending to an upward direction, which is impulse correction, impulse correction, and now we are supposed to have another impulse. And how do you measure the expectational direction or the expectational destination of the next impulse or impulsive leg? What you are supposed to do whenever there is an impulse and correction is to take your Fibonacci tool, and that's the major use of the 5 tool, and measure the starting of this impulse, because the market started an impulsive move way back 2020 October here, and all the way to May 2021 here. And then before we had a rejection, which is the correction. And now when the rejection is ongoing, which is the rejection, what we expect is that the rejection should stop by at least around the 50% region or the 61% region. And that is exactly what happened here. The market stopped at the 61% region. Sorry, not 60, 61% region. So now you had a rejection from the 61% region. But I want you to take note of one thing. When the rejection happened, you are supposed to have the next impulsive leg. You see the way this impulsive leg move with clearly green candles all the way up. So you're supposed to have a replica of that. But in this case, there was a difference. During the process, there was a demand zone created. There was a pullback. And what usually causes pullback? When price is unable to beat past a particular structural level on the upper side, you have a pullback, more like a catapult to the backward side, so as to propel the market now to break past that particular obstacle. So if you clearly check, that means there was an obstacle around here, which is obviously not on this chart. Is actually obvious when you are viewing it from the weekly chart. So there was an obstacle here that the market was obeying that made it pull back to gain more energy. Pullbacks are what propel, okay, like energizing the market to push upward further. And that's why when the market came back up, it actually broke past it. I'll quickly take you to the weekly so that you can see it from there. So this is actually the supply zone that the market was obeying. You see, it kissed the supply zone and then pulled back. They came back to break above the supply zone. So when stuff like this happen, market tends to come back to retest those supply zone. I mean, those demand zones that are created or supply zone. So because there was no supply zone created here, that was why you didn't see market coming down as far as this level here on this particular time frame. So because of this supply zone, market was not able to make it straight up to 80,000 or 100,000, because when you draw your Fibonacci again, you see that the target of our take profit from the Fibonacci tool is actually around the 80,000 and 100,000 or so. So look at it. These are our target. Target 1, the blue line, and target 2, the red line. So that's 100,000 and what? $81,000 as target. So market has not reached our target, and the reason is because there was a demand zone that was created during the impulsive leg move, and the market has to come and retest that demand zone before it pushed to the upside. So that is what the monthly is showing us. The monthly is showing us that the market came back to retest a demand zone, and to know if the demand zone is going to hold, to know if this demand zone is going to hold, you just have to wait and see if the body of the week and the monthly candle is going to close above the demand zone. So this is the demand zone candle. This red candle here show the pullback that happened in the market just before the market was able to now break that particular structure that I showed you from the weekly. So market has come back now and tap into this demand zone, which is the body of this candle. So you draw just the body of this candle to the down wick like this. So the market has tapped into it. So what I want to see now is at the end of this month, where this candle body is going to be at, this current present candle body. Is it going to be above this box or below the box? If it is below, that is a change in market structure. If it is above, that is the upward trend is still holding, and 80K, 100K is still more intact. Okay, so now from that whole perspective, we are seeing now that we are still trading above the box, so we are safe. We are safe. So now, what is the weekly showing us? Going down to the weekly time frame, you can see that the market actually started from here, and the structure actually changed, because from here we are having series of what, down move candle, a pullback, which is like a downtrend, impulse correction, lower low, and then we have a failed swing here. This was the last lower low that was created, and this was the last lower high. And then the market came up and break above the last lower high, which is a sign that the trend has changed. And immediately the trend changed, you have a pullback creating a new higher low, and then push up to create a new higher high. So we are officially in an upward trend as far as the weekly is concerned. So the invalidation to the upward trend on the weekly time frame is only going to happen if the market start trading below the weekly structure here, which is the weekly higher low. The weekly higher low, yeah. So this is the weekly higher low. As soon as the market starts trading below here, that is when you say Bitcoin is now in a downward trend from the weekly perspective. So as far as monthly and weekly are concerned, we are still in an upward trend. And before, I was actually waiting for a bullish candle to form on the weekly, and that's exactly what you are seeing now. We have just one day, which is today. Today is Saturday, 25th of December. So we have just tomorrow for us to determine if this candle is going to close as an engulfing candle to the upper side, telling you that the weekly is about to blast to the upper side. Okay, it's actually engulfing as of now, but we can't determine that now until the weekly close, which is tomorrow. Okay, so now we are still much intact in an upward trend, so fear not. So if you check, there was actually a demand zone here. Like I said, on the weekly obeyed the supply zone that caused the market to come down and create a demand zone below. Okay, so we had a pullback, and then there was a demand zone that was created to push the market to now able to break above this supply zone. So the way I used to explain this in a layman perspective is that, okay, the armies were fighting through, they get to a particular enemy territory that they were not able to fight through. So they went back, they re-strategized, and then the general give them a new strategy to break past their enemy, and they were able to conquer their enemy. So usually the market will definitely want to come back to say thank you, general. Okay, this is more like a thank you, general. And once they thank the general, what do you expect from the army? They will continue their push to the what intended direction. I think this makes sense. Yeah, that's funny. So if that is intact, you will see now that the armies are still much intact and are still more focused on the upper side. So we are still to expect an upward move direction from the weekly time frame. The only validation, like I said, you might want to set an alert below here. The only invalidation, sorry, is when the market break below this higher low. Then we'll start creating series of lower low. So what I'm expecting is this. The market is going to now push back up from here, because also this is sort of like a supply zone around here, from the weekly perspective. That is a supply zone. And then when you see a wick like this on the chart, it shows that there is a pullback here from a lower time frame perspective. So if I switch to daily time frame or 3 days time frame, you see the pullback there that the market is likely going to retest. So from the weekly, what I'm expecting is the market is going to push up like this. If this candle closes as an engulfing candle, the next candle open, and then we'll have a push to the upside, and then a drop to create double bottom. Now, once this double bottom is created, it will push every trader to want to buy and make them believe that this is a value support zone. And once this value support zone has been created, everybody will start buying, because the market has rejected at this support zone 1, 2. So touching it the third time, we induce, this is what we call the liquidity inducement theorem. Will induce a lot of sellers to want to buy from here. I mean, a lot of buyers to want to buy from here. And now what will happen? What will happen? What will happen is this. Because everybody will start buying from here, this is my expectation, this is my must. Because everybody will start buying from here, and the market makers also want to buy, ask yourself this question: who are we now going to buy from? I am buying, you are buying. Why? Because we are saying the same thing in a support zone. The market is in a support zone. If I'm buying, we are buying. The institute want to buy, the banks want to buy, everybody want to buy. Okay, so who are we going to buy from? So this is where the inducement will come in. So as soon as the market taps back into here, everybody start buying. an inducement will happen. And what is that inducement? The market will liquidate people. How does that liquidity work? The market is going to pierce. It's going to be a sharp movement, pierce down to this place. And why am I expecting that pierce? Because also, same way this demand zone was created here, the same way this demand zone was created too. So the market will want to come and test this demand zone also. But the market understand that if it tests this demand zone and rest there, it means that the trend has changed, like I said. So for it to maintain that trend not to change, it has to just come down and blast back up with a wick. Using that wick will make sure and maintain the idea of that demand zone still holding. Do you get? So this demand zone is still going to be holding. If you have a sharp move to the downside and a push to the upside with no body of candle closing below, so you just have to have wick that will tap into this demand zone also just to test it. Okay, back to the analogy I was using to explain. So this is more like this was a commander that helped this army to push above this territory. This is a territory here. It was a territory. That was why the army that pushed above was not able to break past it. So they came back to re-strategize. And this commander, this guy here is a commander, this demand zone, helped them to break through here. And they got to another place again. They went to go and hire a new commander. A new commander have them to break past here. So when they come and tell this commander, thank you, the market, okay, the army were now going back. They remember there was a big commander also down below here. So they want to probably come and what? Say hello. When you say hello, you don't waste time. So hello, and then you are back to track. So that is the kind of movement I'm expecting from BTC on the weekly time frame. So you might just want to see something like this. I know that's not funny, but I think this is even more. If you see something like this, you should be even more happy. Yes, you should be more happy because it will give more energy, to give more energy and reason for the market to actually see 100K very quick. That's what people don't understand. When market liquidates people, that is when market has more reason to buy up to the upside, because by virtue of liquidity, the market makers would have stacked up enough buy orders from those people that will be liquidated. Because when market peers below the support, a lot of people will be scared out of the market and they will start selling. And when people start selling, where do you think all the bags they are floating goes to? It goes deep into another orders. People are buying those orders, and that's why when you keep hearing people say buy the dip, buy the dip, it is because whenever there is a dip, the dip is created for the market makers to buy in more bags. Okay, so that is what I'm expecting from BTC on the weekly perspective. So now going down to the daily perspective, I will actually jump past the 3 days. I'll go down to the daily perspective. So now when you check the daily perspective, that's going to show you the more supply zone that we have. And now if I look at this place, what you have here is a flag pattern. So if you use your goggle and check, a wedge pattern, this is what a wedge pattern usually look like. You have a drop, a bearish wedge flag pattern looks like this. You have a drop, and then you have a zigzag motion. But that zigzag motion deflects to the upside. Now let me show you the difference between a wedge and a flag. If it is a flag, the flag is going to what? Have a drop and a zigzag motion to the upside. I think this makes sense. I'm actually using this opportunity to teach somebody. So this is a wedge and this is a flag. So the difference is that this one deflects to an upside. This actually looks like a flag here. And this one deflects to the downward side. So they are both bearish. This is a bearish wedge and this is a bearish flag. So what's the difference between these two patterns? This pattern tells you that after the drop, we had a flag pattern, and it means that the market is still going to drop more further. Why this pattern tells you that after a drop, we have a wedge, it means that the market is going to what? Reverse. And that's exactly what happened on BTC. So immediately after the drop, we had a zigzag movement to the downward side, deflecting downward, deflecting downward. What does that tell me as a trader? It tells me that the market is likely going to what? Blast to the upside, following the rules of the wedge pattern. And if you look at the chart right here, that's exactly what happened. Exactly what I draw here is what happened. So the market blasts to the upside, following the wedge pattern. And once the market blasts to the upside, what you expect is a retest, and that's exactly what happened here. We have a pullback. After the retest, we have a blast. We expect a blast. So the blast I'm expecting is to go up as far as what? Mitigating this. I'm going to delete everything. So the blast is going to take the market up to, come into the supply zone. Yeah, come into the supply zone. And one of the deficit reason why market is going to tap into this supply zone is that Now, if you draw this place here as a resistance and support trader, this is a trend line. So when market comes up to this trend line now, guess what everybody want to do around the world? People that trade technical analysis, they will want to sell for here. They will say this is a resistance. This is enough reason why I am expecting the market to come up here. You have to think out of the box. You have to think ahead of the market, because everybody will be selling here. The market will blast up to this supply zone. The market will blast up to this supply zone and liquidate those people that will sell here and have their stop loss above this resistance level. Does that make sense? I know that's funny. So now the market is going to blast up from here and tap into this demand zone. If that is not enough liquidity for the market, because by blasting up here, it means a lot of people's stop loss is going to be hit. People that are selling, their stop loss is going to be hit. And that's liquidity. If that liquidity is not enough, the market can still decide to blast out of this support zone, because a lot of persons will be like, okay, this is a supply zone, we can sell from our supply zone. This is a support zone, which is also called supply. We can sell from here. The market can still liquidate those people and come up to the next supply. This next supply, by then everybody has given up on selling. When everybody have given up on selling, everybody will not change their mind and start buying. And that's when that W pattern from the weekly time frame I was talking about will come in play. And then you have a sharp drop, which I analyze from the weekly. And that sharp drop is going to take the market to this supply zone, demand zone that we draw before. And like I said, it's going to be a sharp one with a wick. And then it's now look like a W pattern. Then we'll have a pump, a massive pump to the upper side. I think this whole concept makes sense now. So this is what I expect from BTC USDT. This pump you are seeing now is not over yet. Forget the pullback that you are seeing. The pump is still going to continue. The pump is still going to continue. You might just have a little pullback like this. Let's say something like this towards this red candle. Okay, then you have a push to this demand. That's roughly around 10%. Okay, that's 20% profit. You can want to send a buy limit here. You can want to send a buy limit around here. This is an expo I'm giving you right here. Buy here, 48,400. Your stop loss, 45,001. Take profit, 57,007 or 57,008. That's a good trade, yeah. I think this is okay. So this is going to be a sharp trade. You can try it out. We're just risking 5% to make 20%. 5% to make 20%. That's one ratio. That's roughly 1:4. I don't know, but I think that makes sense, right? So how many? Let me confirm that, please. Okay, this is like 1:3 point something, not up to 1:4. So that is what I'm expecting from BTC USDT. We are still expecting a pump. The pump is not over here because this flat pattern has to work. The wedge pattern has to play out, and because of this, it is this push that is going to help other cryptocurrencies that we are looking at, e.g. the Matic. Okay, now I think we are done. Okay, even when you come to the H4, which is the last time frame I will check on. Yes, if you come to the H4, it tells you that truly we have a loophole that the market is going to go up. So the highest that can happen here is, like I said, we had a demand zone, which is a pullback from the daily. If you check back to that daily time frame again, this red candle here is what you see here as a sharp pullback. So what do you expect after a pullback? Either you're using the Fibonacci tool to measure from the starting of the impulse to the ending of the impulse, so that you can expect a drop to the 61% region and a blast to the upside. Yeah. Or you are trading based on demand and supply, and you're expecting market to come down to test this supply and demand zone and then blast to the upper side. So regardless, we are still pointing to that same direction. So you might want to set your buy orders, like I said, around this region and around this region. Okay, so that we can buy till we get to that supply zone I showed you before, which is here. This is the supply zone that is opposing this demand zone. Okay, and if market come here and feel like there's a need to suck off the liquidity of the buyers that are, the sellers are around here. A lot of sellers are actually sold here, and all of them has their stop loss placed above here. So the market will now push above it to tap into, their stop losses, and in the process, it will tap into this supply zone that nobody will no longer be interested in. People will be interested in this supply zone because market has hit it many times, and that's what everybody knows. Yes, support zone 1, 2, 3. Yeah, it makes it more valid. Let's sell around here and put stop loss above it. But people will not be what interested in this one. Okay, so the market might just come up and tap into this one before the drop that I'm expecting. Like it or not, I'm expecting that drop. So let's see how it plays out. This is my analysis on BTC USDT. And now let's move over to Matic and how does that and how will that reflect on Matic? What will be the result of this whole analogy on Matic USDT? What will be the result? Now the result is because Matic has been able to couple and obey the upward trend that is currently going on, if you view from the weekly time frame, the same whole picture on Matic. Okay, so what you have on Matic is when you drop from the starting of this impulse to the ending using the Fibonacci tool, the market actually came down to retest the 61% region. And like we said, once the 61% region is retested, you are supposed to see a blast to the upside to retest, to hit our take profit levels, which are this level and this level. So the first one is usually our take profit one, which is 27.3, and 27.3 happens to be Matic at 3.44. That is massive, guys. That is massive. So the push on BTC that I've actually analyzed right now is what is going to help Matic to create a new all-time high, and that's what we're expecting, investors. That's what we're expecting. So yes, because this demand zone was created, when you see red candle in between green candles, that is what we call demand zone. So because this demand zone was created, off of the demand zone, market has to react off of it. The market has to spike off of it. So if the market spike like this, creating new more green candles from the monthly time frame on Matic, it will push Matic with another green candle to the upside. And then once you have a push away from this demand zone, that's when you now expect a retest back to the demand zone, just like you had here. A demand zone was created here, you have a push out of it, and then you have a pull back into the demand zone again, then you have a push out of it. So the whole same cycle keep repeating itself over and over again. This thing is simple and it's actually on the chart. You just have to pay attention, right? So what I'm expecting on Matic is exactly what you are seeing, nothing more, nothing less, because I have actually analyzed the model. There's no way I'm going to supposed to waste my time analyzing the children. So the model has shown us that we are going up, and that means Matic is going to create an all-time high. So congratulations to those that have been holding Matic, because this has already proved to you now that you have to keep holding so that you can make insane profit, guys. Imagine from here to my target, that's 35% profit, guys. That's 35% profit, and that is massive, trust me. Okay, so if we want to further look into the in-depth of the candles that are appearing on this thing, you can see now that, okay, on the weekly, we actually have the demand zone here. Market has actually pulled back to retest it. So there's no point market coming down as far as this level is concerned again. Okay, we also have a demand zone here. Okay, and you can see market came back to tap into the demand zone before blasting up. Then we had this one here, another demand zone that create market to break a structure to the upside. Market came back with a wick and tap into it. So what are we saying? We're in an upward trend, guys. So if you check on the daily time frame, what have we not settled here? Which of the demand zone has not been settled? This demand zone was created and pushed market to the upside. Market came back to retest it. Create a new demand zone that pushed market to the upside. Market came back and retest it. Whole same cycle repeating itself. Demand zone was created, market came back and retest it. And then we have a demand zone created, market came back and retest it. Demand zone created, market came back and retest it. So the only demand zone that has not been retested is the one you have here that the market is currently blasting off of. Okay, the market actually blast off this demand zone to break above the structure. So what you can expect and where you can get into this trade right now for those that have not invested on Matic already is to wait for market to retest this whole thing so that you can follow the whole cycle. And when they ask you why are you buying, you said, hey guys, you can look at this whole same cycle repeating itself. Demand zone created, retested, blast up. Demand zone created, retested, blast up. Demand zone created, retested, blast up. Same cycle. So I'm expecting the cycle to repeat itself, guys. So you can want to buy from here. So this is another entry point for Matic USDT with your stop loss below the demand zone and your target. Let's just say 3.5. Let's just put it there. That's crazy. That's crazy. That's 1:4. You are risking 12% to make 54%, guys. And this is what trading is all about. You have to have your stop loss set, because we are not guaranteeing you whatever we're saying as 100%. And this is free signal sharing to you. So moving over to BNB USDT, what do you expect? And what is the perspective from BNB USDT from the weekly perspective? You can see the whole same picture is the same. And why exactly did you think BTC had to come down? Why do you think BTC had to come down? Because the market was scattered actually. Yes, the market was scattered. As of when BTC was at 66,000, it was not having effect on other cryptocurrency. Why? Because market has deflect from what it used to be, because when BTC pumped, every cryptocurrency pumped, but it was not like that anymore. So BTC has to come down and rearrange itself to suit these guys. So any more move here from BTC now would start affecting other cryptocurrencies. Okay, just like you have seen already, like last week. I mean, this week itself, the push, every push that happened on BTC don't pump was affecting Matic, BNB, and all of that. Okay, so by the time you look at BNB now, you start seeing the whole same image of BTC around here. 1, 2, 3. And that's what you see here. 1, 2, 3. And now you have a retest. So during this whole move, the same whole thing, impulse, okay, you have your 5, and then you have a retest to the 61% region. We are supposed to have a blast to the upside to create a new all-time high to our take profit level 27, which is 868. That's the target for BTC and BNB, guys. So, but during the move to the upside, there was there was a structure that was created, which is the red candle in between the green candle, and market need to come back and retest that structure before it blasts to the upside. So this is the structure, and like you can see, the market has come back to tap into that structure. So what you should expect from BNB is to blast to the upside. So if you check on the weekly time frame, you might just want to expect more push. There's no point, because the structure I wanted to say more push downward to has been retested. This is a structure here. The market came back. You can see it. Let me delete this one so you can see clearly. The market came back to retest this structure. This is a structure. The market came back to retest it and blast up, creating a new structure in this candle. So the market came back and retest this candle itself. Let me measure it so you can see it with your clear eyes. And so what you expect is a blast to the upward side, guys. And from this deflection downward, this looks more like a flag pattern. Remember, I was drawing a flag pattern for you. I said a bearish flag pattern is like this, and you have a deflection to the upward side. So I did not draw a bullish flag pattern. And I told you, once you see a bearish flag pattern like this, it means that the market is still going to be more bearish. But a bullish flag pattern is like this. You have a push to the upside and a deflection to the downward side. So this means that the market is still going to be what? Bullish. Can you see that? So if you implement that to the chart right here, what you can see is the market push up from here sharp, and then you start having a deflection, zigzag, zigzag, green and red to the downside. So what do you expect? A blast to the upside. This is very clear, guys. You just have to understand how these things work. So I'm happy that I'm able to see these things, and that is because of my years of consistencies in learning technical analysis. And I think some of my students are even able to analyze the same pairs, and they have the same perspective. Why? Because I teach what I preach, and I preach what I teach. Okay, so that's by the way. So if you check on the daily is going to make this whole zigzag motion that I just showed you more obvious. Okay, yeah, this is the flag pattern, like you said, the weekly push to the upside, and then a zigzag move upward, down. Oh, sorry for the whole jagged juice. So this is what I expect from BNB. So you can start buying BNB now, start DCA. Okay, you can start buying from here. Buy from here. If you dump a little bit, buy. If it came down to clear liquidity around here, buy. But all of this buy, have your stop loss below. Let's say we buy from here. I'll have my stop loss at 400,000. I mean 415 for BNB. And then what's our take profit? 800, guys. That's massive. 850 or so. So that's another 1:4. We are risking 70% to make 70%. This is another potential trade. And lastly, on our list is Alice. Alice is actually not showing me a good image right here, because Alice is not in line with BTC and other pairs. Because if you look at Alice, I think Alice is a new pair that was listed this year on TradingView as well. So looking at Alice, you can see that Alice is a bit more. I'm a bit more skeptical about Alice. That Alice might just want to come down as far as this. I don't know how that is going to be possible, but that's my view on Alex. My target for Alex It's a dump down to this place from the monthly. And before that monthly target happen, there will be a pullback during this pump because the whole pump can't happen without affecting Alice. This can pump to 800 without affecting Alice. This guy can pump to 3.5 without affecting Alice. BTC can pump up to where we're targeting without affecting Alex. So what will happen is that on Alex, what I'm expecting, if you check on the weekly, yeah, on the weekly time frame, we're already having an engulfing candle here, which shows that we are bullish. So this bullish push will push market to this demand zone, okay, to tap into this zone here. So on the daily, that's the demand zone on the 3 days. So if I do a more refinement to the daily time frame, the demand zone will be more obvious. Yes. So this is what I expect of Alice. While everybody is pushing as far as they are going creating all-time high, Alice is not going to be able to create all-time high. Sorry, guys. But the push here is still going to be very, very profitable because if you buy from here now and target here, that's 43% for Alice. So everything is still the same. It's just that they don't have the same structure. So market might not create all-time high on Alex. And once the supply zone is tapped into, that is what is now going to push Alice from the supply zone to tap into the monthly demand zone. That's funny, right? But that's exactly what's going to happen. I'm not saying it's a must, but I believe in my analysis, and in everything you do, you have to believe in yourself. Okay, so that is my expectational bias for Alice, BNB, Matic, and BTC USDT. I will update on this every 2 weeks. So 2 weeks from now, I will check what has happened so far for my prediction because this whole prediction, this forecast is on a higher time frame, so it takes time for them to come and play. But 2 months from now, we will know and we will see what will happen. I think it's time to sign out for now. My name is Pat, the analyst, and if you want to reach out to me, you can use um, the YouTube comment section. You know, drop your comment, whatever you need me to discuss or whatever pair you want me to discuss on. Just drop it on YouTube comment. Because from 2022, I'm going to be starting a standard weekly reviews where we'll be looking at some cryptocurrency and some forex pairs too, because I trade the forex market as well. So I'm a technical analyst, and technical analysis applies to all financial markets, stocks and whatever. So I'm going to be reviewing some forex pairs weekly and some what's it called, cryptocurrency pairs also on weekly perspectives. Goodbye, guys. I remain Pat the analyst.